to the management of Senores Pharmaceuticals. It's a strong debut on D Street, listing at an over 50% premium at 600 rupees a share versus an issue price of just 391 rupees a share. To discuss more on the company once it has been listed and the way forward, we are now joined by Swapnil Shah, the Managing Director of Senores Pharmaceuticals. Thank you so much for joining us, Mr. Shah. Congratulations on such a strong listing. You now are a lot more answerable to shareholders now that you're listed on the exchanges. As far as FY25 is concerned, give us a sense of where you will end the year in terms of top line, EBITDA margins, as well as profitability.
Yeah, thank you. Thank you for having me, and thank you for, just briefing me about everything. So for FY25, we would continue our growth trajectory that we have shown in the past, and both on the top line revenue side as well as on EBITDA side. So it will be better than the industry averages, as I've been talking about, and you will see in coming days in terms of what kind of growth that companies is endeavored to companies going to achieve.
Swapnil, to your mind, what would be the industry growth rate that we should expect for the next 2 to 3 years? And also on your margins, because from the RHP, the numbers that we have, the margins range from 17% all the way to 46% that you enjoyed in FY23. What's the sustainable margin range?
Yes, so the growth likely would be coming from our CDMO, CMO space in the US as we speak. We've signed multiple deals with large pharmaceutical companies, which will give us a massive tailwind on the CDMO, CMO side of the business. As well as we have about 51 products that are in the pipeline. Some of them are already filed, some of them are going to be filed, and so on and so forth. These are niche opportunities. They are large CGT portfolio that we have will further continue to grow. Can't speak for other pharmaceutical companies, but I feel with the growth drivers that we have both on the regulated market as well as emerging market. Emerging market, we have about 600 odd products that are under registration that will likely to get MOH approval and then commercialize in next 12 to 18 months. So those two aspects of the business that we see will continue to drive significant growth. Coming to margins, the first half of margin that you saw for us, that will largely be continue, and we expect as we utilize our capacities more and more approvals will come in both on the CDMO, CMO as well as our own product. Our margin would expand from what it is today. Optimum margin would be a little difficult to say at this point of time. Maybe post March numbers, post full year, we can give some guidance on that side. But I strongly believe and see margins likely to improve, and will continue to have the similar growth trajectory as we move forward.
Swapnil, two things that the street wants to know and that they're quite excited by as far as the opportunity for you is concerned, especially in the developed markets. Number one is CGT, which is the competitive generic therapy, and also the opportunity as far as the portfolio is concerned in the 505B. First up, give us a sense of how does your portfolio look like in these particular areas? What is the opportunity size? And give us a sense, if you could quantify in terms of opportunity, what is it that you can expect to make once your products go on stream?
Correct. So a lot of those products we have 505B2 opportunities that we are currently undertaking it. We have NDA opportunity that we are currently working on, which is going to significantly aid our revenue as well as our profitability. There are unique products that we are launching first time in the US. May not be the NDA or a NDA or a NC, but those are newly launched strains of existing approved generic products. So a lot of those uniqueness that we are doing, which I feel or I see a lot of our competitors are not currently doing it, or they're still far away from launching those kind of products. So you will see in next few quarters, multiple of such launches will happen with a unique proposition that we can offer to the market.
But just getting back to that point about, the 4 CGT, the competitive generic therapeutic designations, CGT, where you have 6 months exclusivity in the US. What could be the potential revenue coming out of that?
Difficult to say right now, exact number, but large part of our revenue would be coming out of those CGT opportunities. Just to give you a perspective, 51 pipeline products that I just said, 28 of them are CGT opportunities for us. They stand as CGT opportunities today. Not necessarily we'll be getting all 28 approvals when the product gets launched, but large part of those 28 may be qualified as a CGT opportunity, which in turn will get about 180 days of exclusivity, which has happened with us in the past in our current approved products. So that will largely continue as we move forward.
Swapnil, out of the 500 crore fresh issue, you've earmarked close to 200 crore for M&A activity. Give us a sense of the targeted entity. Is it one large entity, or are you looking at multiple tuck-in acquisitions? Anything that you've zeroed in on? And what kind of capabilities will the acquired entity have that you will be interested in? And also valuations if the deal is in the advanced stage.
So currently, we are not looking to acquire any entity as we speak. Currently, we are looking to acquire a product level acquisition. So we are looking at multiple product level acquisitions in the US and outside US as well to add to our current offering in the market. Again, our idea is not to acquire those products and launch a generic version of it. We'll again create some uniqueness around it, launch a novel strength or a combination of a product and then launch it in the market. So again, I'm saying, we don't want to do what everybody is doing. We want to create our own space, which we already done. We'll continue to expand and grow and provide the uniqueness. We are not here to compete with people. We are here to create something where we can establish ourselves in.
Swapnil, lastly, what is the plan as far as the US manufacturing facility is concerned? What is the stage of development there?
So I assume you're saying about injectable or
That's
oral
right.
solid is already
That's right.
there, right? So on injectable side, on injectable side, as we speak, we will start the construction. I think in next few months we'll firm up our plans in terms of establishment. Product development is already started, so there are a lot of products we are currently working on the injectable space that we want to do it in the US market. So as the product development will happen, we also want to acquire few products on the injectable space as well. So as we move forward, they'll be established and then we can start manufacturing. Again, on the injectable, our business contours will remain same. We'll continue to do niche products for us, for ourselves, where the ANDA is with us, IP is with us, and then we'll expand on the CDMO, CMO side, also on the injectable. So we'll add our capability with injectable along with oral solids. We'll have the injectable both on the CDMO, CMO side as well.
Thank you so much, Swapnil, for joining us. Congratulations once more on such a strong listing, and we wish you and your team a very happy 2025. Well, let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.